Once again, welcome to Bot Study Center. At Bot Study Center, we educate, subscribe, watch a video, share to your friend, and like, because these things are important and we need them in usual life. So today we are going to continue. Last time we talked about our accounting equation and we saw how we can come up with our accounting equation. So today we are going to look at some of illustrations or on examples on how we can come up with accounting equation in our usual life or in our business. But recall, our accounting equation is assets is equal to liabilities plus owners equity. Now we have our illustration here. They will say the following transaction related to joint trading group, and they have given us some information. Then when we go to our requirements, they have said prepare the accounting equation for each of above transaction. That means each transaction we are going to be preparing its accounting equation. That means every question it shall be having its own accounting equation. So let's start. They have said John started a business with shillings 5 million cash. Person John started this business with cash of 5 million. That means he brought in capital into a business. Business side, they received cash. On his side, he's having a capital in his business. So here we have, this is part A, but I've said every transaction we must first state our accounting equation. So our accounting equation, it is assets is equal to liabilities plus owners equity. That's equity. And I've said this person started business with the cash worth 5 million. So he started business with cash 5 million. Is equal to, as I said, asset is equal to liabilities plus owners equity. Liabilities, do we have liabilities? No, that means we have 0. Plus owners equity, yes, we have capital of how much? 5 million, the one we brought into his business. Yeah, sometimes they can bring in cash, they can bring, current assets. Maybe the person can bring in computer. Those who are doing photocopying and printing, maybe a person can bring in a vehicle. It is the same, that is capital. But of a vehicle, this time they have given us cash, hard cash. By next time they can say, a guy started with a motor vehicle or a van. Hey, yeah, to use in a business. So this is our first transaction. That means we are going to first do total. Our total assets we have 5 million, one for cash. Then also on the other side, liabilities plus owners equity. We have 0 plus 5 million. We have 0 plus 5 million. 0 it is for liabilities, then 5 million is for capital, the one which came in as cash. We have 5 million. So when you check here, under assets we have 5 million, and under liabilities plus owners equity we have 5 million. So our equation has balanced. So let us continue to our next equation, our next part, which is part B. Under part B, they have said He bought computers worth shillings 4 million for business use. Remember, he started business with cash and now he has bought computers. That means he used another amount of cash to buy computers. So he bought computers using the other amount of money. It means under here we are going to have, as we have said, every transaction you first restate our account. You first restate our accounting equation, which is assets is equal to liabilities plus owner's equity. So here our transaction under assets, he bought computers. So we have computers. What? Bought computers for 4 million. Then, but remember, under assets, we are having cash, and remember he used that cash to buy computer. That means we are going to have our cash. This time we shall not be having the whole cash of 5 million. We shall first get our 5 million. We less the amount for computer of 4 million. That means under our cash we shall be remaining with 1 million. So we bought computers worth 4 million, but remember he used cash, which was 5 million. But when we subtract the one for computer, we shall be remaining with 1 million as cash. Then when we go to liabilities, we don't have any liability, so we shall add owner's equity. Yes, we still have capital of 5 million. So here we are going to get our total. We are going to get computers 4 million plus cash 1 million to give us 5 million. Then also the other side, liability, which is 0, plus capital 5 million, we shall get still 5 million. As we have said, this is an accounting equation. Assets must balance with liabilities and owners equity. So that is our part B. Now let's go to our part C. During the operation, he obtained a loan worth shillings 15 million from Stanbic Bank and posted to business account. That means during his operation, he obtained loan. That means the bank will gain. Because he received a loan from Stanbic Bank. So, as we have said, every transaction we first restate our accounting equation. So our accounting equation, we have it as assets is equal to liabilities plus owner's equity. So here you received bank, like you received the bank loan from bank. So we have our bank. You received amount worth 15 million. So here we have our 15 million. From bank alone, the bank was increasing because it received money. But remember, under assets, we still have our computers. What? 4 million. Also, we still have cash. Remember, after buying computers, remained with cash of 1 million. Is equal to, and that's what we have under assets. Is equal to liabilities. This time we have a liability, a Stanbic Bank loan, and we said a loan is either current liability or non-current liability. When it takes more than a year, it is non-current liability. When it takes less than a year, it is a current liability. But when you check in our transaction, they did not mention whether it was above a year or below a year. But remember, every bank loan is a current liability. So here we have Stanbic Bank loan worth 15 million. We don't have any other liability, so we shall add like following our equation. Shall add owner's equity. But remember, owner's equity, we still have capital of what? 5 million. Then here we are adding. Let's first add this side of assets. Assets, we have bank loan 15 million, computers 4 million, those are 19 million plus 1 million. Here we are going to have, so here we are going to have our 20 million. So also the other side of liabilities and owner's equity, we are going to get our bank loan of 15 million. We add capital of 5 million. Also we shall get 20 million. As you are seeing under capital, under accounting equation, we almost follow double entry rule, where you debit, also credit, debit, credit, debit, credit. That's why things are balancing. So that is our part C. Now let's go to our part D. Now let's go to our part D. Part D, they said he bought a land worth shillings 13 million by check. That means he used amount on bank by to purchase a land. So we shall come under our transactions where we are working from. Remember, we said each transaction we must first restate our accounting equation. So our accounting equation is assets is equal to liabilities plus owners equity plus owners equity. So under assets, they have said he bought a land. Here he bought land. He bought land worth 13 million. That means our undercurrent assets, first one, we shall be having land. He bought land of 13 million. but using bank amount. That means our bank amount is going to reduce by 13 million. So here we are going to have our bank. Remember, he used bank amount to buy, to purchase. Used bank amount, purchase land. So under bank we are going to have our 15 million. We less 13 million, the one we used to buy land. So we shall remain with 2 million. That means under bank, after purchasing the land, on bank account we remained with 2 million. Then still under assets, we still have computers. In short, under accounting equation, every transaction you reach, you first restate what you have from above transaction, or from the above from the above part. So have computers worth 4 million. Then also we still have cash. We still have cash worth 1 million. So that's what we have under current assets. Then when we go to liabilities, we still have Stanbic Bank loan worth 15 million. We don't have any other liability. That means we shall add our owner's equity. But remember, still under owner's equity, we still have our capital. Still have our capital, which is 5 million. So this transaction only affected bank and the land. So when we add here, we still have our 20 million because they reduced on bank amount of bank by land. So we still have our 20 million, and also here also on the credit side we have a liability of 15 million plus 5 million, which is still the same 20 million. Which is still 20 million. Then we have now we go to part B. We go to our next part, which is we go to our part E. When you talk about part E, when you talk about our part E, they have said he bought, no, part E, it is here. He bought goods for sale worth shillings 2 million from Tom on credit. That means here he received inventory or things to sell. Some call them stock, others call them inventory. So he bought goods. So we are going to come here under working. As I have said, the first thing we first restate our accounting equation, which is assets is equal to we have said our assets is equal to liabilities plus owners equity. So, and assets, we still have our land. What? 13 million. Then we still have our inventory. Remember what I said, he bought, but they are on credit. When it is on credit, it affects liability and inventory. But when he buys, or when he buys those things using cash, to reduce on cash. When he buys using check, to reduce on bank account. But this time it was bought on credit. That means we have our inventory worth of 2 million, because they have said they bought goods worth 2 million. 2 million. Then we still, and assets, we still have our bank. But remember, this time we are remaining with 2 million and a bank, because he used that money to buy assets. Then we still have cash of what? Before reaching to cash, we have computer of what? 1 million. Computer, it is for 4 million. 4 millions. Then we have cash. Cash, we have 1 million. Cash. Cash, we have 1 million. So our cash is over. Now we go to our liabilities. Under liabilities, we still have our bank loan. It's not yet paid, so we still have it as 15 million. Then they said they bought inventory under inventory. So here under inventory, we are going to consider them as trade payables. Those are trade payables, and they lie under current liabilities. Those people who will supply you goods but on credit. So here we are going to have under liability, we have trade payables. But when you check in our transaction, they have said he bought goods for sale worth shillings 2 million from Tom. That means trade payable, we have our Tom. Tom, the one who supplied us things on credit. So we have our Tom. Tom in our trade payable. What? Because he gave us his things at 2 million. At 2 million. Then when you check, we don't have any other liability. So we are going to say add. We are going to add. We are following our assets. We are following our equation. We are following our equation where they said assets is equal to liability plus owners equity. That means That means here we are going to get our liabilities plus owners equity. That means under owners equity under owners equity we still have our capital 5 million. We still have our capital 5 million. So we are going to first add our assets. When you check our assets, we have land 13 million plus even 22 million, that is 15 million, plus bank 2 million, that is 17 million, plus computer 4 million, that is 21 million, plus plus cash 1 million. It is going to give us 22 million when you get our total assets. Then also when we come to this side, the other side, we shall get our total liabilities plus owners equity, where we have our bank loan of 15 million plus trade payables 2 million. We add on total owners equity, where here we have capital, which is 5 million. That means 15 plus 2 million, that is 17, plus 5 million, it is 22 million. So it means when you check here, we still have our balanced. Our equation is still balancing. Now let us continue to another part, which is part F. Part F, they have said this man sold all goods worth shillings 3 million on credit, and the goods he was having, he sold them on credit, not cash, not bank, but on credit. That means we shall have our inventory is going to be affected, and also we have debtors. People who took goods from business on credit, or people who did not pay. So here we are going to first state our accounting equation, which is assets is equal to liabilities plus owners well said. We are on part F, where we have said we first state our accounting equation, which is assets is equal to liabilities plus owners equity. And from our question where they have said he sold all goods worth shilling 10 million on credit. So it means the goods he bought at 2 million, he sold them at 3 million. That means here on our underworking, we shall have, remember, we still have our land worth 13 million. We still have our land 13 million. Then we go to under still assets, we have debtors. The people who bought our goods on credit, or people who took goods from the business on credit. So we have sold goods on credit, and they'll say they're worth 3 million. Then we have, that means we shall no longer be having inventory because they sold those goods of inventory. It means here they sold these goods. That means we have some profit. That's why our inventory was 2 million. But now when you check, we sold those goods at 3 million. That means we have a profit of 1 million. Then we still have our bank. Our bank is still 4 million. Then from bank, we still have our computers. Computers 4 million. Our bank will have 2 million. Our bank will have Our bank will have 2 million, not 4 million. Then our computer will have 4 million. Also, we still have our cash. We still have our cash of 1 million. So there are no more assets. Record. On this side, under liabilities, we still have bank loan. I'll say under we have bank loan. Bank loan. We still have bank loan worth 15 million. The other one from Stanbic. Then we still have our trade payables because they have not paid them. Still payables, and we've said our trade payables, it is Tom. So Tom is still demanding our business, which is 2 million. Then we have plus. So we don't have any other liability. Now we go to owner's equity. Our owner's equity, we have said we have capital. Still have capital of 5 million. Then we have said still have capital of 5 million. You have capital of 5 million. Then we have said he sold goods on what? He sold goods to debtors worth 3 million. But remember, our inventory was 2 million. So it means it has some profit, not a loss, because debtors, they are more than inventory. So we are going to get our profit. Our profit, it is amount of inventory it is amount of debtors with less amount of inventory. That means our profit is equal to amount of debtors to 3 million less 2 million. To get our profit of our profit will be 1 million. So here we have our capital 5 million and profit of 1 million. And when you check, we don't have any other owners. So here we are going to add and see whether it can balance. That means under our assets, we have 13 million per debtor 3 million, that is 16, plus bank 2 million, that is 18, plus computer 4, that is 22 million, plus cash 1 million, that is 23 million. Then on the other side, on our credit side, we have liability bank loan for 15 million, plus 2 million of trade payable, that is 17 million, plus capital 5 million, it is 22 million, plus profit of 1 million, it is 23 million. Now I think you can see they are balancing. Every transaction, it is balancing. The reason why we are completing double entry rule. In the other videos, we shall see how double entry rule works, how it is come up with. So let us see our next part, or our next part, which is our next question. When you check our next question, they have said, and it is the last one from this illustration. Now say the trade creditors were later paid. These trade creditors, the trade payables, people where we bought goods on credit. Where we bought goods on credit, they were paid shillings 900,000 cash. It means out of trade payables, they paid them 900. So here it means it is going to affect our cash and trade payables. So we shall come here, as we have said, first we state our accounting equation. First we state our accounting equation. where it is assets is equal to liabilities plus owners equity. So here we have, when you check, we still have our land worth 13 million. We still have our debtors because we have not yet received the amount of, we have not yet received money from the things we sold, so we still have them. And remember, data, they are undercurrent assets. So you have data 3 million. Anytime they are going to bring money into a business. Yeah, we still have our bank worth 2 million. Our bank worth 2 million. Still have computer worth 4 million. Then they have said they used 900,000 cash to clear some part of trade payables. That means under cash we are going to use the one they used to clear. And remember, our cash was 1 million less the one they used to clear. The one they used to clear payables, which is 900,000, and we shall remain with 100,000. So we shall have 100. We shall have a 100,000 as our cash. Our under cash we shall remain with 100,000. And when you check, we don't have any other assets. That means to be equals. Now we go to liabilities. Still liabilities. Under liabilities, we still have our bank loan of 15 million. We have not yet paid. Business have not yet paid that money, so we still have it. Then we have under trade payables. They have told us that they cleared some. That means under trade payables, we shall get 2 million. We shall get 2 million. We raise 900, the one they cleared. We have 2 million, the one they cleared. The one they cleared. That means our trade payables we shall have 1,100,000. Our trade payables, this person will remain demanding us 1,100,000. Then plus Remember, accounting equation is assets equal to liabilities plus owner's equity. Under owner's equity, we still have nothing changed. So we have our capital 5 million. We have our profit. Here we are counting it as a profit because we know anytime we are going to receive that amount of money, which is 1 million. So we don't have any other owner's equity. That's what we have. So here we are going to add. We shall get 30 million plus 10 million plus 2 million plus 4 million plus 100. It means we shall be having 22,100,000. 22,100,000. And also here we are going to get 15 million plus 100, 1 million and 100,000 plus 5 million plus 1 million to give us 22,100,000. So that is one of our illustration about accounting equation. So like each part you keep on restating accounting equation, then you bring in items from previous exam, like from previous question. In short, to keep on adding until you get where the person have at the end of trading period. So that is our accounting equation. That is one of illustration. If we get time, we shall see another illustration where we can handle things, maybe when they say they bought goods on credit, maybe when they say they sold good on cash, they bought good by cash or by check, when they say they bought a lot of things, because this is not like our question they bring under accounting equation. There are many, but we shall see. So that is our example for today. Next time we shall look on another example and we will see. Then after I'll go to another thing. So that's it. That's for today. We meet in another video. But remember to share to your friend when they're in secondary, when they're in higher education, when they are aware this information is important.